Why did Bitcoin drop today? Well, there's a lot of stories going on. Hey, this is CeoTrades, where money works for you. Today, we're looking at why did Bitcoin drop today? The reason that we neglect to pay attention is that there are a lot of people talking positively as well as negatively about Bitcoin. But before we look at Bitcoin, let's just take a look at some of the things that are happening in the stock market. This is a S&P 500 index. You can see that it's down from its highs last week of 3,900. That's down to 3,800. So it's gone just a tad bit down, and that's a normal fluctuation. This is the QQQ, the trust, and this one has also gone down a little bit. It's not much different than what the S&P 500 is. This is the Dow Jones Spider Index, and this one has also gone down a little bit, about 10%, 20%. That's quite an amount right there. And you can see the Spider Index, the SPY, SPY from the S&P 500 ETF Trust, that this one has also gone down just a little bit. Now, what is this telling you? Well, there's numbers being weighted, and we're waiting to see what is happening. But this is something here. It says that at 4:30 today, U.S. Labor Department says fake June CPI release is circulating online, and that could be having the market go downward, spiraling. But that's not the only news that's fake out there. There's on Watcher Guru, there was posted in reference to Bitcoin, and we'll go over that in a moment. But let's switch over the screen so that we see some of the headlines that Whiteboard was showing out there earlier in their video in reference to auto loans. And auto loans are something that people don't know how big they are, but loans are a way that most of us, including me, get cars. Now, 1.42 trillion in auto loans are out there right now. 1.42 trillion. Now, 11 years ago, there was half of this, 0.71 trillion, 0.71 trillion. Why has it doubled in 10 years? For many reasons. I mean, it's also customary for things to go up just in general. Inflation is constant, right? It's doubled in the last 10 years, the third largest consumer credit market. Interest rates have skyrocketed as high as 25%. APY. That's reality. People are paying more for their cars. 46% of loans are under water, meaning people are just going to default on their loans and they're going to get repoed. Repoed is a big business. In the next year, it is an immense business. So if you have a tow truck and you're ready and willing and able to get out there, that's a business that's going to need people. People owe more than the car is worth. So cars are actually way overvalued, and people invested in cars. Why did it invest in cars? Well, first of all, new loans skyrocketed after rounds of stimulus, right? You can see that somewhere when the stimuluses were given, somewhere at 2020, right in here, somewhere in here, you can see that it just skyrocketed. Now, before that, it was on a consolidating path from 2015 all the way to 2020, and then all of a sudden it dropped, and then boom, this is because of the stimulus, and that's why it went like that. People went out there with what they were given, and they purchased stuff instead of investing. Average credit of borrowers has declined. High default risk. That's right. If you have high credit out there, then you're at risk for defaulting. Every 1% increase in the loan rate causes a 3% rise in monthly payments. If there's a 1% increase, it causes a 3% rise in monthly payments. Cheap credit propped up the auto market. Creditworthiness is in the gutter. A lot of people have unbelievable credit. It's not that great anymore. You can see here, if you have a 300 to 500 rating, the average loan rate for a used car is about 19.87%. For a new car, it's 12.53. If you have a 780 rating or above, it's 2.47 for a new car and 3.61% for a used car. And now if you have a 600 to 660, which is somewhere around what the average person has, it's a 6% loans for a new car and 9.8 for a used car. That's pretty high. Those numbers are very high. I haven't seen those numbers in over 20 years when I started purchasing cars. Stimulus spenders have financed themselves into a corner, with 1 in 12 Americans more than 90 days late on car payments. The repo, guys, is coming. Car price increases have accelerated. 1,799 in 2019, 3,301 in 2020, 6,220 in 2021. That's a 25% increase. Immense. What now? Demand destruction is imminent. Inflation making everything more expensive. These numbers will eventually come down. How? First of all, car prices will roll over near all-time highs right now for new and used automobile. A new automobile costs around 46,000 average and 30,000 used, respectively. Its estimated monthly payments have risen to a record of 712 on average. This is when COVID started, right in here, somewhere in there, and then boom, once the stimulus checks hit, it went that high. As rates rise and defaults ensue, eventually car prices plunge down too. Now, just be aware that as the car industry gets into 2023, the beginning of 2023, maybe even through April and May, people are going to start defaulting on their loans, and you're going to be able to pick up some of these cars, some of them used, some of them just parked in people's, I don't know, homes or streets or wherever they keep them, and they're just going to be sold off at a competitive rate. Right now, used cars are very expensive. My car, which I purchased 7 years ago, it costs similar to what I would have paid when I got new, and that's amazing. I didn't actually get it new, but I got it pretty new, and that rate is still existent today. Very highly overpriced. Now, why is Bitcoin going down? Let me see if I can get a chart of Bitcoin in here so that you can see what I'm looking at. Give me a second here. Let's see. Right in. Are we looking for it? Give me a moment. Here we go. As we see this chart right here, we're going to see what has happened with Bitcoin in the last several days. Bitcoin, in the last several hours, at least close to 24 hours. Bitcoin has made a drop. You can see right in here. Why did this happen all of a sudden? It went down from 249 today, and it dropped to the rate was at 19,805 to 19,400, and it's still going down. It might go down even more as the labor numbers come out. Now, there's fake labor numbers out there. We understand that that's realistic and that can happen. Another advantage that we have is we can compare Bitcoin to what's happening in the markets. And in reality, since before the COVID situation happened, Bitcoin is still maintaining its level compared to the stock market, S&P 500, and so on. It's still maintaining its level. This is pre-COVID levels, 19,000 or so. This is Ethereum. It's 1,000, and it was somewhere around that before COVID. But now this is the extreme fear index right now. It's at 16. Yesterday was at 22 when I was contemplating making a video, but I was in the middle of something and I couldn't get out of it. It's a 16. I believe that in the next 22 minutes, this one that right now it's 7:37 p.m. July 12th, this will drop another point or two to at least 14, maybe even 15, somewhere in there, because just people have sold off and it's going to go right back down. This is a reality. If you're looking to invest in Bitcoin, I picked up a part of a share of Bitcoin today for long-term investment and holding. But just remember, all the information that I give you on this channel, I am not your financial advisor. Always seek professional advice from your professional associate or consultant so that you can make the best decisions for you. This is CeoTrades signing off. Until tomorrow, we'll look at another session of the markets. Take care.